And as Vivi mentioned, China's IPO market has been suspended since late October after several companies reported falling profits right after listing. The initial public offerings freeze was intended to shore up investor confidence. The China Securities Regulatory Commission has been implementing tighter rules for companies to list, and the process has now entered a second phase. Joining us with more on this and his outlook for China's stock markets is Leland Miller, the president of China Beige Book International, which is an independent source of data and analysis on China's economy. Leland, thanks for joining us again.
Sure.
So Leland, we're in the second phase of this tightening process where the SCRC is going in and doing random checks. How has this overall regulation overhaul been working?
Well, for the first time, I think people are realizing that the regulator means business, so that they're not just saying you need to get your house in order. You actually have to say your house is in order. You have to have your sponsor institution say that, look, we've looked over the records, we can bless this. So it's being taken more seriously than it has in the past, and because of that, you're seeing a lot of companies being fearful of going forward.
So those random checks instilling a bit of fear in people going, we better watch out, they're coming to check out.
Right, it's the nature of the random checks. They think that they mean business this time, and that there's real concern that they need to get the process right this time and get a better reputation for China's capital markets.
So is this going to shore up overall investor confidence in the IPO market?
It should. I mean, what's been happening, obviously Chinese companies have a reputation for having several sets of books, for having fraudulent practices. It's been a rough road for the past several years. Right now, they're doing everything they can to instill confidence that the companies that will be moving forward will be the better companies. They'll be companies that actually have clean books, and it's a long process for this, but it is looking like things are getting better.
The China Regulatory Commission, the idea behind these regulatory checks, analysts say, is to weed out all the people that cannot go through this trouble. And they thought there would be a significant decrease in the amount of companies filing for IPOs. But this really hasn't been the case, as Vivi reported there. By March 29th, only 124 companies waiting for IPOs terminated the applications. 765 companies chose to go ahead. So is this having the desired effect?
Well, you've got a gigantic pipeline because there haven't been many IPOs for a while, but you're actually seeing more companies step back and decide they're not going to try to list than were before. So it depends how you look at it. People are being more cautious right now because you're having higher ups required, the sponsor institutions, to look after the books and to say, we think we know what's going on here. Because of that, there is more hesitancy right now.
There's a new head of the CSRC, the former boss of China Bank, Gong. What do you think is the significance of his position? What kind of reforms can we see him implementing?
Well, I think the market would be happy if he simply continued Guo Shiqing's reforms from before. Guo had a very good reputation generally from investors. They thought that he meant business and he wanted to clean up the markets. Xiao is also a reformer, has a reputation of being a reformer, but they're not quite sure. There's a lot of questions about why the old regulator was tossed out and why the new one was brought in. So what people want to see is consistency, and they want to see continued push towards tight regulation. And if he simply continues down the line of what they've been doing, I think that's a positive for the market.
Is this lack of consistency the reason we saw the Chinese markets tank recently? The Shanghai Composite Index is down about 1.8% year to date after being up about 5% in January. What's the reason for this downturn we've seen over the last 2 months?
I wish there was a single reason why the Chinese stock market does what it does. I mean, people call it a casino for more than one reason. But the reality is that there's questions about the housing, whether the regulations there are going to get tighter. There's questions on listing and IPOs. You've also got questions on growth generally. So there's a lot of question marks out there. Things are not as clearly upbeat as they were a few months ago. And so you're seeing a bit of a sell-off. But I'm not sure that there's one factor that dictates how the Chinese market does at any given time.
Now, you mentioned concern about GDP.
Yeah, I mean, in a couple of weeks that there's going to be a GDP number, official GDP number released. The China Beige Book, we do our own growth announcement. But what I think people back in Q4 thought was that, wow, China's back. China's growth train is looking good. The January and February numbers weren't that strong. People are now having hesitancy. A lot of the big banks are announcing that the GDP downgrades. It'll be interesting to see what the number is. What we're seeing right now is actually very strong growth. So we think that to the degree that investors are looking at the markets and thinking that, that they should downgrade their forecasts, we're actually thinking that there's going to be surprises to the upside.
Okay, thank you so much for that insight. Leland Miller, president of the China Beige Book International.